Okay, let me see if the live chat shows, if the live one shows up here. Yep. Okay, and pop out chat and copy web address. We'll go into the chat here and go to properties, and we're going to make this larger. Okay. Live chat. Okay, we're going to look at that. I need to. That's what she said. Okay, let's see. Oh, what? What? I just claimed it back. What? 4 hour. Apple. Let me go in here. Oh, why is my camera blocked? There we go. Turn on the do not disturb. Okay. There we go. Hit that thumbs up button. Mofo. We're going to go live chat. And Apple still has confirmation. Let me see the cat. Well, there was a cat bounce. I have in my notes. There was. Has cat found a bottom at 241? You're at 251. Are you coming up here for that gap? Boom, boom, boom. Okay, let's start scans because I know you mofos are going to show up and say, what do you think of a sundial? What do you think of this penny stock? What do you think of this one? Morning, Q-tip. Scans. Nothing in the core portfolio. J&J and Pfizer. Ironically, Pfizer's CEO was sitting at the head table with Xi Jinping last night. The powerful and the wealthy getting wealthier at the back of taxpayers. Penny, I love you. It's okay. It's okay, little girl. You'll be fine. Let's see. I watched a video on a fitness dude who's got like, I think he gains 100, 200,000 new subscribers on YouTube every day. God, I forget the dude's name. I need to go in and look at. Oh, come on. We're going to stop that. Come on. Come on, man. We're going to relog in. I think it's having some problems, so let's relog in. You know what? I'm going to log out and then log back in. Gives me a good chance to talk about TrendSpider's Black Friday sale. If you haven't gotten a hold of TrendSpider, the Black Friday sale is amazing. Core portfolio, nothing. Let's look at covered calls. I don't like this list to scan, but it is what it is. Energy names. EQT. Cord and MRO. Energy just has not cooperated whatsoever. UVIXY. Are we finally going to see the VIX take off? It's low enough so that we're We're bound to see it happen. Upwork. It's not a penny stock. Upwork's not a penny stock. XLU. Are we finally seeing? I'll get to that one. Q-tip. Let me just find some stocks to. Upstart. I like Upstart. Fastly. CRISPR had a big thing. SMMT, this is the one that was at, I think it was 250, if I'm not mistaken. Back here where it rose up. Yeah, it rose up to 250. And the slow ride down. I'll put SMMT on the lot. Buy from June. Lyft. I'm not a big fan of Lyft. I think they're going out of business. Fubo. I'm actually looking for a new TV service for my parents. And Fubo may be one of the ones that I'm looking at. The Property Brothers, or as they are better known, the Cardboard Brothers, the Cardboard Personality Brothers, are on CNBC. Man, these two just have no personality whatsoever. Hi, I'm Jonathan. I'm 6'4", and I don't do renovations, but I read a script. I'm just not a huge fan of theirs. And it's totally, full disclosure, totally out of jealousy. They've got a good gig going on. NASDAQ. BIIB. Is it time for Biogen to take off? Dollar Tree. This could be. Could it fill the gap? Excel. I'm not even going to put that one in. WBD. This one's interesting. Does it come back up? I mean, they're just getting killed in the streaming wars. And S&P. There we are. Duke Energy. I mean, we talked about Duke. CVS. And Schwab. Boy, if you got Schwab at 51, I mean, look at that. We're going to go back over here to the strategy tester to look at the 4 hour, because I think you got it in at 51, if I'm not mistaken. Yeah, 51.04. Hoo-wee. Okay, let's look at Upwork. Recent pop, 40% from God. I mean, look at that. Let's take a long term. I mean, Upwork right now, you've got the MACD, which is starting to come down. Again, the market's a little hot. Wow, manufacturing index came in good as well. So you got the MACD kind of crossing down. You got the RSI way too high at 77. So I wouldn't say enter in here. You've covered the gaps, that the most recent gaps. I'm sure there's other gaps in this. We can go back and look a little. Yeah, I mean, this gap up here you covered. I mean, that's pretty much what this gap cover looks like. I'm sure this is going to be a downward trend because it's, since 2021, you've just been in a downward trend. So you're making lower lows and lower highs. So you're still in a downward trajectory. The 200-day just kind of was created. If I pull this back and I pull this back here, okay? So this is going to tell us when we were trading at the highs up here, how many people are still holding? Well, not that many. How many people are holding from the slide? Not that many, Q-tip. So your top realm of ownership is right where you're at now. You've got to break through that in order for the price to really go. Now, you did go from 10 cents per share to 21 cents per share. Let's take a look at some of the fundamentals. You are making money, you're losing money. It's $13 million in income. So you do have an income. Price to sales is 2.96, which is a little bit expensive. It's up 38% year to date. Target price $16, and you're trading at $14. Not a huge upside. Most recent things are downgrades. Most recent price target is 13. You're trading at 14. Trading at 14.48. And insiders, they're all selling. I mean, they're taking their profits. Nothing huge. I don't see millions of dollars here. Morning, Daniel. Morning, Joe. I don't see a huge issue there. Let's see what Seeking Alpha says. I'm sure let's see. What? No, we're going to go home. Upwork. There we go. And buy, strong buy. I mean, I would say this is probably changing as we get a little bit more upside ahead. God, I can't imagine. I mean, that chart right now just looks to me like you bounced. If you break and hold 15, we talked about SMCI breaking and holding 300 yesterday. It didn't, so we went down. I'll take a look at that one in a little bit, but clearly I'm seeing right here. If you look at that, right there, that line at about $15, say, I think that's providing a significant resistance right now. Your 50-day starting to move positive, so that's a good sign. You'd have to really continue this move to break that because, again, the volume, it's just so far down. So you're gonna face this resistance on the way up, and their fundamentals. Their forward PE is 21. That's pretty expensive. It's not crazy expensive. But, one of their potential rivals, Fiverr. Look at this one. They're losing money. Their forward PE is 11. Their forward PE is 11. The forward PE on Upwork is 21. So Fiverr, and again, Fiverr is not making, they're losing $2 million. They're not actually making money. So Upwork's closer to actually turning a profit. But Fiverr's down 15% year to date. The most recent upgrade, $33 price target. It's trading at 24. So I'd probably like to see. Let's see what the peers. Let's see if they include Fiverr in the peers list. Upwork, First Advantage, Korn Ferry, Kforce. No, they're not including any. Oh, they did include Fiverr at the end. So you can see Upwork over 1 year down 3%. First Advantage Corporation up 20%. That's a human resources and employment service. All of them are human resources and employment services. So Q-tip, this is part of why I say get Seeking Alpha. I mean, this is perfect example. For $189 and you like Upwork, well, who are maybe the better ones? Look at FA. We can look at FA's chart. They're up. First Advantage Corporation right here. Let's look. Okay, so you're at 1309. You're at 1395. You're just starting to break the 200-day. Your 50-day still moving down. You've still got a gap up here to 1480. So again, that 200-day is going to provide some resistance, and it's going to be a little bit hard to get through. If we take a weekly look at this one, and we bring this, no more data. Okay, so they're a little bit of a new one. Let's take it to here. You know what? We'll take it right here, right there. This is there's nobody really holding up at the top here. You know, you take it back here. The volume shelves, again, they have to, this is a little bit newer of one, so it's going to be a little bit harder. But this one, you know, you've got some resistance, and it's pretty much putting its line in here at 13. Let's look at their, they have a P of 48. They have a forward P of 12, remember? Upwork is 21. Income, 42 million. These guys are making money. They're up 19% year to date. Most recent is initiated with a $17 price target. You're trading at $13.94, so decent upside from there. Average price target is $15.72. So it's just about looking at you know, again, having your tools in place. That's where I think it's significantly important. I have this up here for the last three, so you can see the chat window. Boy, it's freaking busy on this screen. There we go. You can see it. At least you can see the chat today. So you can do full screen and not necessarily look at the chat. That's why I put it up there. Okay. I did my scans. What we're going to do is we're going to go to SPY. Buffett bought more power. Yeah, Paramount Global, I think it's an undervalued one, but I think it's an undervalued stock because the sale. I think they have a significant amount of content. I just found out that Showtime Anytime is going away. I don't know how I'm going to get my Showtime now. I guess I have a friend who has it on Hulu. Maybe I can do that. Just watch it on. Although Hulu, I hate that Hulu, 50% of the time I don't get Dolby 5.1 on Hulu. And I know, listen, you know, rich guy, put your nose in the air. Dolby 5.1 is important to me. It's like somebody who says, you know, hey, I have to have Jif peanut butter. I don't want that crappy Walmart stuff. You have your likes, you have your dislikes. Mine is, hey, I want Dolby 5.1. I do not have Dolby Atmos. Understand, my house was built in 2014. Bluetooth and sound bars and things like that were not around. So I just, you know, again, well, Scott, that's here. We can, yeah. If we just go over and we go Qs. Let's do the charting for the last 5 days. And we'll select symbols. We'll go Apple, Amazon, Meta, Netflix. Netflix has been crazy. We'll get rid of this one. Microsoft has been nuts. Microsoft's at all-time highs. That's probably, I mean, that's 6. So if you look at the Qs and we look at 5 days, we don't want to look at 1 year. 1 year is going to be skewed, but we look at 5 days. Qs is up 1.91. Apple 0.97. Amazon is actually down. Meta is up 2%. Netflix is up 3%. Microsoft is perfectly even over 5 days. Is Microsoft really even for 5 days? Hold on. That doesn't make sense to me. No way Microsoft is even over. No, this is wrong. This is just flat out wrong. That Microsoft price is wrong. Must be because the market's closed or something. I don't know. Let's see. 1 day. Let's put it back in. Something's up with their data. Yeah, something's up with the data here. But you can see QQQ is up. I mean, the good news about it, Scott, is that it's here. You know what? We'll look at VOO, and then let's find an equal weighted S&P ETF. What's a big one? SPXEW. Let's see what this one is. RSP. That's the big one. That's the other big one. Let's look at RSP. I know there's RSP. What is going on with this? There we go. RSP update. And we'll take this out. Okay, so 1 year RSP is down 0.4. Year to date, we can look at RSP. It's only up 2.94. As you bring this in, again, VOO, as you bring it in 6 months, RSP is up 2. VOO is only up 8. 1 month, RSP is closing in. And then 5 days, RSP is actually beating over the last week. And part of that just means there's, you know, the Magnificent Seven have carried the market, and this is where you hear market breadth. A large part of the equal weight. So just to kind of take a step back, equal weight means you have S&P 500. This is one stock of every S&P 500 in RSP. VOO is a market weighted. So Apple, the Magnificent Seven represents somewhere in the neighborhood of 35-40% of the actual market cap, meaning if you take the number of shares times the stock price, that's their market cap. And so, you know, Apple, significant amount of shares, significant high price, significant PE, it dominates the market. It's the largest stock in there. So of the 500 stocks in the S&P, they may have 30% in VOO of Apple. I mean, we can look at VOO's holdings and stuff. Let's look at the holdings. Here you go. So 31% of this is the top 10 holdings. It's Apple, Microsoft, Amazon. Microsoft and Apple are the two biggest. NVIDIA, Alphabet, Meta. I mean, that's, you know, Tesla. 1, 2, 3, 4, 5, 6, 7, 8, because I include Netflix in mine, in my grade 8. But again, 1, 2, 3, 4, 5, 6, 7, 8. What don't they include in the damn? Oh, it's 2 alphabet classes. That's why. Yeah. So you've actually got, I mean, you add in alphabet with both. But yeah, Berkshire Hathaway's in there. So this is what's called, and if we go to RSP and we look at the holdings, you'll see, look, it's just 0.25% of every company. So 2.24, 0.25. That's the difference. So if you ever had a chance, but when the good news is, as companies stocks start to rise, you're starting to see the breadth of the market. The other stocks actually start gaining, and some people say it's good. I'm of the assumption that holy crap, some of those stocks that are way up are just so speculative. Yeah. So, I'm going to go. I'll be right back. I do have a lot to talk about. I do want to take this and show this on screen. So what I'm going to do is go over here. Then we'll go here. And preview. There we go. Okay. So that one's there. And then, good morning, John. Okay, I will be right back. Okay. Hit that thumbs up button. Like and subscribe. Let's see. We're going to go to SPY. I mean, look at SPY here. I actually want to go to the weekly because there's an important realization to make. Okay. Let's see. What's the worst performing? Costco is down 1.67. Amazon's down 1.5. This is all based on Walmart. Anything attached to Walmart. PanW is down 6.9%. Horrible guidance based on billings. Tesla down 1.37. They bounced off their gap. I probably should mention that as well. Tesla bounced off the gap. Okay. We're going to go into this. Let's pick this up. Okay, we're going to start out with this one. Good morning. It is Thursday, November 16th, and I want to thank Mike Danley yesterday. He was the first one that notified me. My editor screwed up yesterday. I uploaded a blank podcast by accident yesterday. Mike was the first one to notify me on YouTube. It took me about 20 minutes to fix the error, so my apologies to anybody who listened on Spotify where the intro, the song intro, was played, and then it was just blank. I was able to re-upload to Spotify. It did take a little while. I had to actually remove the video from YouTube, but Mike let me know first. And Mike Danley, if you're listening, first off, thank you. Second off, reach out. I'll give you a couple months, 3-4 months of my newsletter for free. So let me know. I really appreciate it. And thank you to everybody that reached out post afterwards. It just shows me that people are listening. So thank you very much. Let's talk about SPY. I got up on my screen right now, SPY, and we're at a pretty inflectious point right now. You can see the line that I drew here. And essentially this goes back to the first time ever when the S&P hit, and this is SPY, so just take a tenth off, move the decimal point from the right to the left one, and you'll get the S&P. But this was the first time the S&P hit 4,500 back here in August, late August, early September 2021. You can see we took a leg down. That was September and that was October weakness. But then we rallied into November and into December. In January 2021, we hit our highs. The high on on SPY was 479.98. From that point, we continued to hit lower lows and lower highs. And then you start to get the recovery of this year. And all of a sudden, we have higher highs and higher lows. That means a trend until we hit June, which was the high that we got to was 458. Right now, you are at 450. Yesterday, you closed at you got to 451 during the day yesterday. So you closed at 449. Essentially, what you have here, you can see clear resistance pattern right there. So the question is, do we get through that resistance? Where do we go? You still have confirmation above the 9-day. You have this MACD that's about to cross up. You have your RSI at 59 in no man's land. I don't know where we're going up, but this move has been super violent for the first couple of weeks of November. And we're bound to hit resistance. Just know we're bound to hit resistance. And that's the first time we hit it since August 2021. So I just want to say, hey, just be careful. Understand that this is going to provide a choppy market right now. You have plenty of negative catalysts, a ton of negative catalysts. I got this in the newsletter, in my email from Seeking Alpha, and I just showed somebody asked about Upwork, and I was showing about Upwork, how you can find other stocks other than Upwork, just because it's expensive on Seeking Alpha. But this is an email that comes in from my portfolio every day from Seeking Alpha. The top performing stock yesterday, Shopify. Then Disney. Disney has a new investor that wants board seats, so positive thing. Then Netflix, Eli Lilly, SMCI, and PanW were the bottom portion. PanW was just a little bit expensive. And we went into earnings. I'll go over that in a little bit. But that email every morning provides me a ton. It also provided me news on Walmart and FBCG, everything. One of the things that I was doing yesterday, by the way, was I think it was Zephan asked me about QCLN yesterday while we were on YouTube afterwards. And this is a stock that I took out of the core portfolio. I am still in this one. Just so you know, I am still in it. I haven't sold it. It has been a horrible performer. If we go and we look at this one, it is because of the solar holdings. This is a clean energy ETF. It has just been a horrific holding of mine. It suddenly now has some confirmation, 34.46 here on November 14th. You're up to 36.56. What was interesting yesterday was I was taking a look at the holdings. I'm like, wow, Tesla, they're up year to date. First Solar, they're down, but Rivian's up. On semiconductors doing well. Albemarle doing okay. You look at Enphase doing horribly. Lucid Group doing horribly. But you look at those top 10 holdings, and some of them are okay. And so I went to Bard, and I'll include this in a link to this in the newsletter. But I said, hey, Bard, do you know the details of the ETF symbol QCLN? It says, yeah, here's the top 10. Here is a table of the top 10 holdings and the weighting of them. For a complete list of holdings, please visit the fund's website. I said, what's the price of QCLN? Current price is $36 as of Wednesday, November 15th. Right now, it's trading for $36.55. The day range is 34.6, blah, blah, blah. I said, based on the holdings, what's the fair value of QCLN? And then it goes into the NAV. which is net asset value. That's a solid term. It basically takes the value of all of the sum of the parts and adds it up. Well, the NAV of QCLN is 39.19. Now, obviously, that's going to change based on the actual holdings values. So it's just a snapshot in time. But what it tells me is QCLN is probably undervalued. So, for instance, November 15th, 2023, QCLN is trading at a premium of 7.6 to NAV. This premium is likely due to the strong performance of the clean energy sector. So you can take a look at that. It's an interesting way to look at it. I just wanted to point that out, that you can kind of Google stuff and use artificial intelligence. Artificial intelligence has a huge weight in my day of trying to find stocks, trying to find value, trying to understand stuff. Just saves me time, saves me a hell of a lot of time. In fact, yesterday, I was using artificial intelligence to ask some stuff. And Jason from TrendSpider, we went over this in our meeting that I'm actually editing right now. Should be out probably later today, maybe tomorrow. But it's an hour-long discussion, and one of the stocks that we look at is Palantir. And one of the things that I was saying is, hey, it looks like it's probably just forming a capitulation here up at 20. And Jason and I look at it, and he said, 25 looks more like a way to go. Yesterday, I said, you know what? I like 20. And right here, I kind of drew that one. And I think I even drew it with Jason there. I said 20 makes sense to me. If you pull this one back here and we go to the highs, one of the things that Jason was pointing out is volume typically attracts stuff. And he said up here between 23 and 25, that's a good solid indication that there's a lot of people holding up here. There's still a lot of people holding. And so price may go up there. This $20, there's no real range here between 16 and 20. So where it goes, I don't know. I just know it hit that $20 price twice. I sold out yesterday at 20. I sold out of my position. I will buy back in. This is a stock that I want to be in. I just think that we've run up so much. I think that the total gain was like 36 to 40%, somewhere in that neighborhood. With that amount of gain in this amount of short time, I said, you know what? I just want to take the profit. Screw the taxes. Screw it. I just want to take the profits. I sold out of Palantir. I'll buy back in. 100% I will buy back in. Microsoft, they announced yesterday they released more Copilot details. And they announced that they said, hey, there's new chips. We're creating new chips for our data centers. I don't know if they're consumer chips, but I think they're more data center chips, which they said doesn't really compete against NVIDIA. And was interesting is that Jensen Huang, who's the CEO of NVIDIA, was up on stage with Satya Nadella, who's the CEO of Microsoft. He was on stage with them, and they announced these new chips. NVIDIA, AMD, all the chips went down on that news. The stock was solidly, all chip stocks were solidly down yesterday, but that were in AI. NVIDIA, let me see. I'm refreshing this so we can look at it because it seemed to get held up. But here we go. NVIDIA was down. It's down 0.64%. It's at 485. I think it was close to 500 yesterday. SMCI was down kind of in lockstep. It's at 285. I like this one. Microsoft, you're at all-time highs here, 369. All-time highs. The MACD looks like it's crossing a little bit down. Microsoft is up 0.62. In my mind, if you want to trim at 370, I don't think it's unheard of to trim at 370. You've filled the gap, but you're at all-time highs. This is a solid company that continues to just present revenue opportunities. So I don't know that you necessarily want to get out of this totally. But if you wanted to, the MACD's just crossing up on the weekly. It's still got solid confirmation. So if you're holding long-term, I don't see a need to sell this. Honestly, I just don't see a need to sell it. Palantir's a different story. Apple's a different story. Amazon's a different story. They're all different stories. Microsoft, with the news that's coming out, I just don't see a need to sell it. Macy's came out with their earnings. Solid beat. It's up, let's see, 10%, $13.90. I think we just went over this before. I'd said, hey, it's not worth, going into this one with a risk of earnings. I think you're solidly looking at this 1404 to 1464. I think you're solidly looking at that getting beaten. Your first stop loss, it's at 1390 right now. So if you buy today, your stop loss should be set at $13.30, because if we go back down below that 200-day, you don't want to be holding this one. This, in my mind, is an absolute trade. But they said their inventories and margins improved. I'll include a story from Seeking Alpha on it. But solid beat. And I've told you, I really like Macy's. I mean, their e-commerce business, just solid. Shopify, I forgot to mention this one. I mean, this is still solid gain. We're still up 30-40% on this one, and you still have confirmation down 1.25% today to 67. If it were me and I didn't have a position in this, I'd be buying this at 67, thinking that we're going to get to this 200-day to 80. And I think 80 is solidly in the realm of possibility before the end of the year. They announced that they had written over 10,000 lines of new code using Microsoft Copilot. I mean, that if that doesn't tell you that there is a market for Microsoft Copilot and that this is going to be a big deal, Microsoft. I mean, Microsoft for me is probably one of the most solid. Now, it is expensive. Let's go over here and we'll look at some of the fundamentals. Its PE is 35. I mean, that's double the S&P. The growth in this one, this could be, they could double. If Copilot and ChatGPT actually take off, this could be huge. I mean, remember, these guys have GitHub too, where you actually trade ChatGPT, modules and stuff. Now, ChatGPT is hoping that you're going to use their app store, but Microsoft, hey, if I've got my own trained bot, and I don't necessarily need to use the App Store because I can use Llama or one of the open source AIs, like even Guard. I forget Gawk on Tesla's one. If I can do that and just use GitHub, Microsoft owns GitHub. It's crazy good. Crazy good. So Microsoft is expensive. Just understand that. There's nobody buying this. Satya sold $12 million worth. That is literally he's buying a baby pool. That's like a plastic baby pool in his backyard. $12 million. Smith Bradford, vice chair and president, that's probably he's buying his kid a little truck racer. I mean, that's $16 million. Don't even pay attention to these dollar amounts. That dollar amount means nothing to these guys. They're just selling out to kind of leverage their position a little bit. That's all they're doing. Mara is up over 10. I wanted to let everybody know Mara is over 10. You are okay selling. Algorithm got you in at 942. I've been saying, hey, when it dips under 10, buy it under 10. This solid one was a 19.83% gain that you just made. 942, you're in. It's 1018. I mean, that's a solid 10% gain probably, close to it, because we still have confirmation up here. In pre-market, you're at 993. So it's down below 10. So it went over 10. Understand that is a 100% trade. Do not hold Mara and think, God, I'm going to wait till 12. When it gets over 10, you sell it. Now, let's look at Netflix, because Netflix had a huge move. We're at $464 on Netflix. Now, the only article that I could find is that noontime yesterday, when the stock took off, Bank of America adds Netflix as a tier 1 best investment ID, along with SEE and VRT. I will include this in the newsletter. This is a great article, but this is the only reason I think that Netflix continues to pop. Now, we are in a huge upturn. This gap goes to 471. You're clearly going to cover this gap. Now, it could provide some resistance. It absolutely could provide some resistance if we fill that gap. Once it gets up there, I think it starts to pull back. Here's the weekly. We're only just above the 200-day. You've just shot up from that 200-day at 416 to 461. This one all-time high is almost $700. Yeah, it hit $700 November 15th, 2021 at the peak. So I don't think it's done. It is expensive. Look at Microsoft. The PE is 35, forward PE of 28. Netflix, on the other hand, PE is 46, forward PE of 29. But these guys are killing it. The growth in this is going to bring that PE down. I'm a big believer. I bought more. I hold a really, really solid position in this. Earnings front, Cisco announced earnings. This one, I thought it was going to $60. It went the absolute other way. They announced crazy bad guidance. I say buy this on weakness. Right now it's at 47. I think anything under 48 is a solid play in this one. The problem that they had was they had such solid quarters over the last time. They really had to backlog, and people hadn't installed some of their systems and some of their equipment, so they didn't buy no equipment. So the guidance is, hey, we might have a couple of quarters where people aren't buying the equipment, but they still point to, hey, we've still got solid business. If you look at a weekly on this one, you can see we've changed the trend here from 2021 down, and you're in an upward trend. Now, you did hit this high back here of 57, almost 60 back in September. You've been in the downward trajectory. Right now, you're under that 200-day. You will open up under this weekly 200-day. That will provide a gap. And I always say, any reaction in the market is an overreaction. I think this is a solid company. If we even go back to, I'll do a monthly on this one, because this is one of the ones where you go back to 2000 and you can see the run up in this, and you're not even back to those highs of 68, 69. That was back in 2000. This has just been a dog of a stock to hold, so I trade it. I would absolutely 100% trade this one. And if we look at the 4-hour on this, you're not in this one, or you might be, you're in at 53. If you bought this at 53, I think you're fine holding it. I think you're fine adding to it. I think long-term Cisco's fine. Let's see, Pan W. That is part of our core portfolio. This is one, I say it's a $250 stock. I still think it's a $250 stock. It's at $240. It is pulled back to $240 based on earnings. They beat, but they gave super weak guidance on their billings being impacted by the cost of money. I still think you hold it to $250. This is a billing issue. It's nothing more than that. People are pulling back on some of their spend. That's exactly what Walmart said. Walmart gave some guidance that people are pulling back on their spend. This one is down 6%. This is a huge move in this stock, but it's just pulling back because it ran to all-time highs. That's all it did. But they did say, hey, there's some pullback here. People are trimming. Now, Target, on the other hand, Target's getting pulled back by 2% because of that sales stuff. You have this buy here at 126. I think you sell it anytime it goes over 130 if you're looking to sell it. I'm continuing to hold 126. I think you come back down here to 112. This, if we just pull this back and we go to, I'm going to look at volume levels on the 4-hour, and we'll pull it back to, let's go back here in February, where it was about 170. I could pull it to the highs, but you can see right here, solid volume gap. Volume shelf, I should say. Solid volume shelf. If I just pull this back, we'll see it here. Let me see if I can pull this back. Oh, come on. Let me pull it back. It's not going to let me. So, but here, maybe if I just pull it down. No, up. No, can't move it. So we'll have to look at this one. But the volume, trust me, the volume shelf is right there. Solid volume shelf. I will probably be adding to this one. I'm not putting it back in the core portfolio. The reason is because the management sucks. Just honest to God, the management sucks. I will include a link to Seeking Alpha article on that one. BABA earnings. Here's the Seeking Alpha BABA earnings. BABA earnings, they missed. So let's take a look. BABA, because the stock is down. I think it was down about 5-6%. It's down 8%. It's at $80. It's selling at $87. Like I said, anything that you take risk on earnings, this one I didn't think was worth it. I thought maybe it could pop, but it's down 8% at $80. I think if you get this anywhere under 80, I think it's a decent play. They are in, China's in trouble. The China consumer, it has extreme weakness. You can see this $100 mark. We've hit it, let's see, once, twice, 3 times a lady. And then you just use it as resistance. I think if you buy this at 80, I think at some point in time it comes back to 100. I just don't know when. You need some type of change in direction. And with that 50-day moving positive, but the stock continuing to just move down, I don't think that 50-day starts to move positive, and that 200-day on a weekly is just too negative for me. Tesla, we talked about $240 being a gap in Tesla that I thought it would fill. It filled it. 242. Why? I'm not doing anything with it. I just kind of tend to think that you're moving down. There were a bunch of stocks yesterday that hit a new 52-week high at some point in time. Microsoft, Amazon, Meta, Costco, Broadcom, CrowdStrike, Palantir, Walmart, Intel, Lululemon, DraftKings, DoorDash, Digital Realty, Expedia, Fair Isaac, Intuit. I will put all of those names in the newsletter. One that I noticed today that I particularly own, and I noticed the bounce in this, and I just wanted to bring it up, that it's a solid bounce in a solid company that has been beaten down. This is Caterpillar. Caterpillar was a buy in the algorithm at 241 at the beginning of November 3rd. Solid earnings, good earnings, nothing crazy. You had the death cross right before earnings, so you didn't necessarily want to buy going into earnings. It did gap down on earnings, came back, filled the gap. The gap was from 228 up to 241. Solid gain there. But you're even in more solid gain. So I wanted to point that out because I do own this one, and I kept looking at it. And I'm like, should I sell it? It's on its way down. It's just a mainstay that you kind of keep. AIG, Manuel from Spotify wants me to look at AIG. AIG is one that I traded during the 2008 housing crisis. This was a solid play for me, and I tried to get more of my friends in on this one. But if we go back here and we look at a weekly, let's look at a monthly. We'll have to go to monthly to go back to 2000. You can see 2008 housing crisis. This was an $800 stock. Most of that is because of the reverse splits. It just never recovered. And so for a long time now, it's just never recovered. And you can see 66 to 70 is probably a ceiling where it's not really getting over. The algorithm doesn't really work on this one. This is an insurance company. I wouldn't necessarily look at trading this one. I would look at owning it. Now, buying and holding over 24 months, you make 11%. Is that good? I don't think so. But kind of depends on your target, where you want to be, how safe you want to be. This is Insurance Diversified. They make they have a market cap of $44.57 billion, income of $3 billion, PE is 12, forward PE of 8. The average target price, 72. You're trading at 63. Nothing exciting to me. There's nothing that pops out to me here. Oh my God, I've got to buy this. AIG, the 10% owner, they bought back their own stock, $20 million. Again, there's nothing crazy exciting to me. They bought it back at 25. So that was back in June, probably of a few years ago. There's nothing crazy. AIG, yawn. I mean, I don't know why you want to own something like this. It's not popping to 120. It's not popping to 120. It's, it is what it is. So, Manuel, depends on what you want to own and what you want to target. Scans, J&J, Pfizer, they're two of the drug makers that have been beaten down. I always said that I thought J&J was a $160 stock. It's at 148. I just own this. I just own it, and I forget about it. I think I put like a couple $1,000 that's turned into $10,000 over a period of time, a long period of time. I just own it. I don't think, again, this is kind of a yawn stock. I just don't worry about when it goes down, but it's well under its 200-day on the weekly, and it's been beaten down heavily. So I just own it. I'm not getting out of it. I'm not, trading it. Pfizer, on the other hand, I'm out. Pfizer, I'm out. I just don't trust this guy, the CEO. I don't trust the company. I just don't like it. And it has nothing to do with in my mind, I just think that they are a little greedy. And that's the case for me. I will say that I think they're greedy. EQT is a nat gas play, I believe. EQT, let me make sure. EQT. Because Energy Transfer is this is the nat gas. Natural gas production company. So if you want EQT, rather than trading Boyle, maybe own EQT. You got a multiple top here at about 44, but you're trading at 41. It's a solid 8-9%. In the meantime, you're getting a 1.43% dividend. It's up 22% year to date. Meanwhile, you look at Boyle. Boyle is down 85% year to date. So rather than trading Boyle, maybe own EQT. Cord Energy and Marathon Oil. Marathon Oil has been beaten down. Marathon Oil, I've been watching. It's under its 200-day. Oil in particular has been beaten down, but the 25.58 buy right here, you probably have 26 in this one as it starts to recover. The 50-day starting to move down. You put your floor in here down at 23. I don't know that it's a great buy, but I like it. UVIXI. When are we going to see this one turn up? UVIXI got a cross up. Is the VIX going to take off? Let's look at the VIX. We'll type in VIX. The VIX is at, why is it doing yikes? Oh, it auto corrects on me. Let's look at the VIX. Oh, what's it doing now? Hold on one second. Yikes. VIX. And we're going to hit that. Let's see. Nope. Seeking Alpha. This is Safari. This isn't Seeking Alpha. It's There we go. We'll click on that. Safari auto fills for me. So the VIX is at 13. UVIXI 1164. 1176 is the buy. This has been a loser, just all outright a loser. XLU is the only spider sector that crossed up, and we talked about it. Utilities, do they have their comeback? Are you getting to that gap up there? This one, 57.15. I said this was an opportunity. You're at 61. So you got your 10% in there. You got 12% to fill that gap. You can see it rejected right off that 200-day at 62. But this one has another cross up here. The RSI is at 60, approaching overbought. Not crazy, but XLU is not a horrible thing. It's just been beaten down. I mean, you can see if we go to a weekly on this one, you can see right there that target, that channel. I almost timed it perfectly back here. But you have a 35% thing. Right now, you have a death cross happening in XLU. But it did cross up on the 4 hour. So if you wanted to trade, if you wanted to dollar cost average your way in, I don't think it's a bad price to get in there. SMMT, we had this one as a buy based on an insider trade back here, back in June, July. It went from $2 all the way up to $2, almost $3. Great trade if you got in. Since then, it's just been a dog. Trading at $2.04 is the buy. It's at $1.99. The only reason is because that billionaire dude put some money into it. Dollar Tree. This is an interesting one because we have a gap, and we've now changed the 50-day to a positive on the 4 hour. You have your earnings coming up November 28th. Just understand, between now and November 28th, if this gap gets filled, I think that's a dangerous sign for this stock. Because that's just, that's up too fast, too quick. If you get good earnings and you haven't filled that gap, I think that's where you fill the gap. But that's the chance that you take. That's the gamble that you take. Now, one of the gambles that was worth it, and I said, hey, $51 is too crazy good. This is kind of where it was before. $51 on Schwab. I added a little bit more. I'm still holding this one. I got out with some. I didn't get out of my full position, but I got out some at 60. which I'll get out again, some, maybe all. I don't know how financials will trade, but this one has a secondary cross up here. And so it's an additional move. If we get through that 200-day at 57, this gap fill all the way up to 59 gets filled again. Just my take on it. That's kind of where I'm at as far as what I'm thinking. I'm looking to see where the volume shelves are from the last. So this pop right here back in July, where we got up, I think almost 66. You've got nobody holding above that gap. I mean, there's kind of, it would take a big move to get up to that 64. But if you want to talk about a weekly, and we go back and we look at, there it is. Okay. And we just look at where it hit the highs here, February 2022. Where are people holding? They're all holding below. So that's the dangerous part of trading this one is you've got to create new volumes up here in order to hold on, because people will just start to hold it. So, okay, if you want any of the products that I use TrendSpider. They are having a sale right now. TrendSpider. It is for the elite level, which is the middle level. You have an option monthly. It's $43 a month. That is 45% off. That is a great price for a monthly price for TrendSpider. They don't offer monthly prices very often. This is one of the first ones that actually came in a monthly. What I always have done is pay the yearly. Now, if you pay yearly, it's $382, but you get a 7-day free trial. If you've listened to me enough and you just say, F it, I want TrendSpider. I want to take emotions out of my trade. I want your algorithm. I want your watch list. I want your scanners. It's $296. That's $80 savings. That's almost additional 30% off there. $296. So again, it's 45% off, 60% off, and 69% off. Hey now. But you can get there. Just go to Linktree, linktr.ee/daily stock pick. Seeking Alpha, it's $189 for a year. I love this service. I would pay the $189 between TrendSpider and Seeking Alpha. It's under $500 for both. And those are the two tools that I would absolutely pay for. $500, that's an Xbox right now. Or one of those Xbox, the top tier Xboxes. What else can you get for $500? A meal at a nice restaurant for the family. Maybe that's a Giants football game. Maybe it's a trip to the movies to see Barbie these days with the prices. But $500 is nothing compared to the tools that you're getting to actually make money. I never understood. I use free tools. I use the Webull desktop. To edit videos together, I use CapCut when I have Final Cut Pro. Free tools are fantastic. Just understand this is leveling you up. And leveling up is what took me to, new highs in my portfolio and new highs in my trades. If you want to get there, again, it's Linktree, linktr.ee. The newsletter's free. Every day I send out a newsletter with all my notes and all the charts that you see. The newsletter for the week is free. For the paid one on the weekends, it is paid. And some of the reviews of the most recent ones is that I'm just getting better at that one. I put in stock charts with what I'm doing with my current positions. And like I said, Palantir was one that I identified at $20 that I was going to sell. The stop loss didn't take the first time. I think I had set it up in Fidelity wrong. It didn't take on Tuesday. It took yesterday. So $20 was my thing. That was in the paid newsletter. If you want the paid newsletter, it's just dailystockpick.substack.com, and you can pay for it, all that you want. Visible is a phone service. I was watching Stetson Dotson, I think his name is. He's a fantastic. He's got the best YouTube channel for phones, and he recommended Visible. Visible is the best $25 a month plan that you can get. What's great is you click on the link in my link tree and you get $20 off. So your first month is $5. Unlimited data, talk, and text on Verizon's network. It's unbelievable. If you want the premium version, it's $35. $35 gets you unlimited premium data on 5G's ultra wide and fastest 5G. 50 gigs of premium data on the 5G and 4G ultra wide. This means if you're using more than 50 gigs of data, you're under 50 gigs of data, you're not deprioritized on that 5G and 4G LTE networks. So unlimited mobile hotspot. You guys know a few weeks ago I was in Philadelphia. I did the podcast on my unlimited hotspot. If you're getting a Tesla, click here, $500 off and 3 free months of full self-driving. If you want AT&T fiber at your house, I look so pretty because it's 1 gig service that I have in my house for like $60, I think, $70, somewhere in that neighborhood. Uploading, downloading, it's just a pleasure having 1 gig service at your house. I would think that would be standard. If you're on cable service and you have AT&T in your area, click on this link. I will tell you, you will not regret getting a gig service at your house. Even getting one of the lower tiers of AT&T at your house. AT&T and cable are just different. If you have Verizon, I would say get Verizon. I just don't have a link for Verizon. But if you want that service, you can absolutely get it. I think it's a top tier service. If you want to follow me on any of the socials, right here. And if you want to email me, it's right here. Okay, I will talk to you guys later. I will see you tomorrow. Bye-bye. Okay. I ignored you chats. So let's see. Buffett, yeah, like Para, good morning. Remember Kramer was gushing over Pan W. I know. Scott, he was gushing over Pan W, and we all see what happened with Pan W. It's because I think he had one of the executives on or something. So, konnichiwa. Mo. Kobanwa is afternoon. Konnichiwa is morning, I think. Morning, Zephin. Morning, Scott. Did you mention? No, I don't follow CELH. I don't follow that one, Scott. I mean, it's a reverse split, 3 for 1. I don't follow this one. They do have like a gap down to 47. PH. Parker Hannafin. Yeah, I think that one's, I don't know, what do they do? Remember, I'm tech. This is industrial. I'm not industrial, but God, look at that gap up after earnings. That gap from 370 to 390, and then it's just taken off. Whew. I mean, that's shit. COVID at 100, and you 4 times your money in 3.5 years. That is fantastic. Sonos announced their earnings. I didn't think they were so bad. I think that's a $15 stock. Yeah. Yeah, I mean the reaction to earnings wasn't what I expected. They were kind of muted at first. But Sonos, there's rumors always when Sonos reports that they're going to announce that Apple bought them for the speaker quality. I just don't ever see it. But anybody that I know that has Sonos in their house, in fact, my brother has a full surround system with Sonos. And it's unbelievable. Chris, high five, man. Nice job. Great trade. You got a gap up here between 17. I don't know. You'd have to get through that 200-day first. But I think that 50-day starting to move positive is a good sign. Just this slide has just been unnecessary in my mind. I think with the four, they probably gave some good guidance. Let's see. Let's look at Sonos here. Let's see what the news was on Sonos. I didn't think the earnings were horrible, but guys, light for the fiscal year ahead, and that was the first reason they went bad. Sonos is at high risk of performing badly. Learn why. Hold on. Let's see. Sonos has characteristics. Oh, it is declining. I'd be a little bit careful of this one. By the way, that alone, if you have stocks like Sonos and stuff in your portfolio, freaking click on that link and get Seeking Alpha. It's unbelievable. I mean, I love this service. I can't tell you. I'm sucked in. I mean, I am an affiliate, so I get the service for free. But I would absolutely pay for this. I mean, I didn't know how good it was. It's unbelievable. I mean, look at the quant says sell, but Wall Street says buy. They're just different. 5-year, you're down 19%. 5 days, you're up 16%. 1 month, 15%. 6 months, you're down 17%. So, Chris, 100% a trade. I wouldn't own this, and I wouldn't own it because not because their products aren't good. I wouldn't own it for the financials, and that's essentially what I think a lot of people here are saying. Earnings per share of minus, they lost 7 cents per share. Beats by 3 cents, revenue of $305 million, beats by $5 million bucks. So I just wouldn't want to be in a stock that's a kind of turnaround on that one, but it's a solid play. I like this one. And look, that's the ratings, the quant history. Just hasn't been good. But God, can't argue with a 10% pop. That's a solid play. And great trade. What, the software on Sonos? I thought the software was actually pretty good. I play with I'm heading up to New Jersey next week, so I'm going to play with my dad's Sonos system. Kenvue. J&J. Zephyr, you're too young to own J&J. Okay, so Zephyr, if you got a $10,000 portfolio, I might put 200, maybe 500 into J&J, and just forget about it. I think it's going to like underperform. I mean, here, we'll look at J&J here. I own it, and it's not like I regret owning it. I just know it's underperformed. Look at that over 1 year to the S&P, the 3-year to the S&P, the 5-year to the S&P, the 10-year to the S&P. You do get a dividend, so let's look at the metrics. Performance, and we'll look at total return, and then we'll select symbols and we'll put VOO, and we're going to put that. Let's just look at that. I mean, that's identifying it right there over a 10-year period. So that's why I say put $500 into it, because healthcare in my mind just hasn't, and J&J, they haven't performed, and so I think it's a mainstay. So if we do go into a recession, at least that $500 is decently working. But right now it just hasn't worked, and the reason it hasn't worked recently, or even the past like 10 years or 1 year or 3, we've just been in this realm where the S&P has just been ripping. So what's Kenvue? Let's look at Kenvue. Isn't that a spinoff? Let's see. Operates consumer health worldwide. Operates 3 segments: self-care, skin and health, and beauty. By the way, beauty was up really with Target yesterday. You can see the buy is not covered by the quant. I think this was a spinoff. Yeah, I think it's a spinoff. Yeah, you barely use the software. I do it because when I go up there, Zephin, The bass is booming because my dad loves to feel the bass because they have that subwoofer, and the subwoofer is awesome. So he loves feeling the bass. I can't hear a damn thing out of the speakers. He's got the bass turned up so much. He wears hearing aids, so he's kind of a little bit hard of hearing. Really? I didn't know that. I don't have a Sonos speaker in my house. My family all do. I'm the only one. I put in, like I said, in my living room, I have a Yamaha receiver. That's a super high-end receiver years ago. It's not super high-end anymore. But I have in-wall speakers for 5.1. And I have a GE, what are they called? Sync lights, CYNC. Yeah, CYNC. And so my entire living room is turned blue. I turn the blue lights on to watch movies. So it's fantastic. It really is good. Let me go grab my computer real quick. By the way, for all you guys who sit here and wait, I think we're going to have a nice buy here in the afternoon. Let's see. Preview. I've got to shrink this down. And we're going to... Hey, and I did this all without having to... there we go. Having to head out to the bathroom. That's an accomplishment. I think that's the main thing, Christian, is when J&J has historically diversified and thrown off a stock, it's been for a couple of reasons, either lawsuit reasons or they've wanted to isolate an earner. I mean, there's so much financial manipulation in that company. But I've held it. Let me see. I'll tell you. Let me see. I'll tell you when I bought it. Let's go into Fidelity and look at my tax lots. And I'm sure I got tons because I just reinvest the dividends. I'm not down actually that much. All positions. We'll go to J&J. We just got a dividend. Let's see. Okay, J&J, my total gain percentage is 75%. It's jumping between 75 and 76%. So I'm up 76%. If I go to the tax lots and I look, I acquired, it looks like 40 shares in 2012. That was, what? $3,000 worth. So I put a decent amount in there. $3,000 wasn't a crazy amount, but it was large enough that I should have probably bought Apple or something else. Why buy in the afternoon? I just have, honestly, Zephan, here's why I think. If I go to TrendSpider and I look at SPY, and there's no other reason. I mean, this isn't going to be like super super technical or anything. When you wind up down on days like this after huge rallies, and the only reason is because one retailer gave a decently bad forecast, I think the overall market winds up, covering that. And you're looking at Walmart. The only reason Walmart's down is because it's at all-time highs. But if you look at the 5-minute, it just opened up. So you're looking at 449. We don't have a gap. But look at this is what I want to point out. Yesterday at 555, and you can see every day at like 355, you get that spike. And so in my mind, that afternoon spike the past 2 days has been high. So I just think, I just have a feeling that we're continuing this leg higher. This big gap right here between 440 in SPY and 446. I mean, let's take a look at the Qs on 5. This is the Qs on 5 minute, or that's 4 hours. Let's look at 5 minute. It automatically goes back to the strategy tester. Let me get out of the strategy tester here. Here's the Qs on 5s. You've got the 50-day moving down. The 200-day is still positive. At very worst, you come out down to 383. You came down to 384 there. I just have a feeling that we regained some confirmation here. Those Bollinger Bands cinched up, and then you took a leg down. The Bollinger Bands will cinch up again, and maybe you'll take another leg up. It's just a feeling that I have. I wouldn't say, I'm saying in the afternoon. I'm saying if you buy now, maybe you wind up. But it's nothing other than, hey, there's the feeling that I have. Yeah, Christian. That's why I say buy Amazon, because Amazon for me, it's putting in that floor at 140 right now. If we just go to the strategy tester and look at the 4 hour. I'm going to take this out. Remove all annotations. So, see, here's a gap that's caused in Amazon from 142 down to 141, say, right here. This one has gaps all over the place. This earnings gap at 120 to 125, I don't think you come back to that. But with that golden cross, I also don't think that you come way back down to the 50-day of 134. I think you're putting in a 140 as a floor. If we go to a weekly and we just take a look and we pull this, I think we did this with Jason, is you pull that back to the highs here, you can see we got a volume shelf right around 145. I think that's where you need to start building the volume shelf in order to continue it. That 132, the reason I say 140 is because 140 is the price point, the swing. If you want to sell it, you can sell it. But if you want to stay in it, I think you'll have an opportunity to buy it down here at 132 again. But, 5 years from now, whether you buy it at 140 or 132, you're never going to be able to tell. Now, Devon, oil is just taking down on the downside. This is down almost 2%. It's been a solid loser, unfortunately. Pan W is hanging around at 240. And Scott was right. Jim Cramer freaking cursed us. This is under the 200-day at 240. No reason for it to be down that low. Yeah, they filled the reserves. OPEC is probably going to... how can it go back up? Is all of a sudden Iran starts making waves again, and then people ban Iranian oil. Yeah, Devin, I don't blame you. I hope you just got out at at 130. I think today's Walmart news, I think puts Target in kind of a sight line of, hey, I think you might have this gap fill back down to 110 because they're being given the benefit of the doubt that they said customers are returning and customers are strong. But Walmart isn't saying that. So, yeah, CVX and Exxon, and even Morgan Stanley, I don't blame you for adding more. It's at 142. Devin's a different story. Devin's got some fundamental issues. We can go over here and go to Devin. Devin's just got some problems. It's a stock that wants to hang out at 40 for some reason. You can see strong buy, invest for the right reasons. Love is in the air, time to go bear hunting. I mean, this is just a ignored oil play. Analysts, Seeking Alpha analysts love it. Wall Street loves it. Quant hates it. And it's the valuation that the quant hates. You look at the sales down. Price to book, it's expensive. The dividends, by the way, if you look at the dividend history, it's kind of been coming down. They had this nice pop here. I thought that was going to be enough to bring it back up, but it's not. So, yeah, Scott, I would agree with you. This FBCG, by the way, which you could have bought. I mean, look at this stock. This is the blue chip growth. When you get an opportunity to get this under the 200-day, when the RSI is down here at 27, solid play. The only thing you have to worry about CVX is here. CVX's PE is 10. The forward PE is 9. Exxon's about the same thing, I think. Yeah, it's 10 and 10. The only thing that you have to worry about with CVX is if for some reason energy continues to come down, we can look at a monthly on this one because it's, we're in an election year. Nikki Haley has started to say that she wants to take the gas tax back, which would reduce the cost of families. They're so for oil and gas, and they want to pump more of it. But I think that $120 mark right there is probably where we're pulling back to if we continue on this route. If you look here, 2014. You haven't set up this volume shelf here. You're right, kind of heading into this volume shelf where there's nothing. The real volume shelf is 130. So while I think you fine adding at 142, and then like Christian said, anything under 150, I think you're fine because that's where this volume shelf starts is really 150 here. I think you're okay. I just think oil and gas has an opportunity to just go down. I mean, it really does. So, but as they make more money and more profits, you'll share in it as a shareholder. It's just, will you share in it as much as, some of the growth areas? But it doesn't hurt to have exposure to this area at all. What's the one that's most down? Let's see. PanW is the most down. I'm telling you, anything under 240 on PanW, I think they're putting that floor in. That's right where the 200-day is. It wants to hold that 200-day right now. God, how good has Qualcomm been, by the way? How great has that been? I mean, look at that solid move from 108 to 130. It's a $28 move in a stock. Roblox had their product day. Nothing exciting. Nothing crazy. Shopify, like I said, that one's going to SMCI. I think you're getting that gap fill. Walmart's down 6%. I don't think Walmart's a buy here. I think you wait for it, because I do think that if we look at a long term of Walmart and you look at a weekly, we're probably coming down to 151. That would be where I would assume that we'd come right back to. LNG, the problem is Europe has all their energy that they need. And so 171 is where Cheniere is. Cheniere Energy is just, they're just going to kill it as far as making money. They're kind of the liquid natural gas company is. They're just going to continue to print money. They'll sell cheap natural gas here to the Chinese. They'll sell cheap natural gas to Europe. Europe has their energy though. And I got to tell you, so far here in Atlanta, it's going to be 72 degrees here in Atlanta. And we're in the middle of November. So, okay, I'm going to edit these videos. I will talk to you guys tomorrow.